Welcome to the Deep Dive, where we give you the data you need to make smarter housing decisions. Today, we're doing a really focused look at Orangevale, California.
Yep. We're going to break down the prices, the inventory, basically what's really going on as we head into 2026.
And the big story seems to be
Yeah.
this major cool down, right? The frenzy is over.
It is definitely over. We've gone from what was an extreme seller's market to something a lot more balanced. I'd call it a mild seller's market, but only just.
Okay, let's dig into that because the numbers tell a really interesting story. A bit of a paradox, actually. The median sale price in Orangevale,
Yeah.
it's $505,000.
Right. And the headline there is that it's down a huge 20.8% from last year.
Which to a lot of people sounds like the bottom is falling out.
It does. But it's where you have to look a little deeper because the median price per square foot, that tells a completely different story.
Right.
That's actually up 7.3%. It's at $353 a square foot.
So wait, the overall price is down, but the value of the actual real estate, foot by foot, is up.
Yeah.
How does that work?
It's all about the mix of homes being sold. It's a bit of a statistical illusion, you know?
Right.
We're simply seeing more smaller, maybe entry-level homes selling right now. Fewer of those big high-end properties are transacting, and that pulls the overall median price down, even while the fundamental value is still climbing.
That makes sense. So if the value is holding up, why aren't buyers just snapping everything up instantly? Which brings us to the pace of the market.
Exactly. The days on market, or DOM, is the key indicator here.
How long a home is listed before an offer is accepted?
Yep. And it's jumped to 23 days.
23. And what was it a year ago?
Just 8 days. An unbelievably fast 8 days. So this shows that buyer urgency has really eased up.
And that has to be tied to inventory. Are there just more homes to choose from?
There are. Inventory has basically doubled from its low point in 2023. We're sitting at about 75 active listings.
Which gives us about, 1.2 months of supply?
Just about 1.2 months. So to be clear, anything under 4 months still technically favors sellers.
But just barely.
Just barely. Buyers can breathe. They have time to think. They have time to negotiate.
And you can see that negotiation power in the sale prices. Homes are now selling for, on average, about 2% below the list price.
And seller concessions are back in a big way. We're talking credits for closing costs, mortgage rate buydowns.
Right.
In the greater Sacramento area, something like 44% of sellers are offering concessions to make a deal work. It's a return to normal.
So if you're looking in the area, how does Orangevale stack up against its neighbors, affordability-wise?
It stands out. That $505,000 median is way more accessible than, say, Fair Oaks at $616,000.
Especially Folsom. Folsom's the real outlier here.
Oh, Folsom is its own world. The median price there is $765,000.
And it's still going up, right? It's bucking the trend.
It is. It's actually up 8.4% year over year. The demand there is just incredible. But even in Folsom, homes are sitting longer, about 35 days on average now.
And on the other end, you have a place like Citrus Heights.
Right. The most affordable of the bunch at $463,000. And because of that price point, it's still intensely competitive.
So you're still seeing bidding wars there.
You are. About 42% of homes in Citrus Heights are still selling for over the asking price.
Okay, so let's boil this all down. What's the practical advice for someone in Orangevale right now? Let's start with buyers.
For buyers, use this moment. Use the longer market time, use the fact that sellers are offering concessions, you can negotiate on repairs, you can ask for credits. The power has shifted back towards you, at least a little.
And for sellers.
Pricing. It is all about pricing it right from day one. We're seeing a big gap between what sellers are listing for about $557,000 on average and what they're actually getting.
That $505,000 number.
Exactly. Don't overshoot the market. If you price it accurately, it will sell.
So looking ahead to 2026, what's the forecast? A boom? A bust?
Neither. We're forecasting stability. Modest growth, probably around 3%, driven by the fact that inventory is still pretty tight, and we expect mortgage rates to ease just a bit, maybe into the mid-sixes.
So the big takeaway is that the Orangevale market isn't about frenzy anymore. It's about being measured, being adaptive.
That's it perfectly. Success now really depends on understanding these local numbers and building a strategy that fits the current reality.
Well, if you are a buyer, seller, or an investor trying to navigate these markets, Orangevale, Fair Oaks, Folsom, or Citrus Heights, it's pretty clear you need an expert. You can call us directly at 916.619.1971 or visit wrspg.com.
We've done the deep dive. Now you can make your move.